Welcome to my midweek market recap, 8th September 2021. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems. They run as add-on on the TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. Starting with a look at the global market. Australia first, using the all ordinaries .aord index. Several weeks ago, the weekly displayed a bearish headwind signal. Since then, the backdrop color is remaining bearish. However, as I mentioned in previous webinars, because of the trendline support, we were not going to short. Daily also had a trendline support, and that is holding. In fact, two of them. Today's traffic light color is red. Weekly backdrop is also red, so we are not going to try to buy AORD. Neither are we going to short because there are trend lines in both daily and weekly support trend lines. AORD is in an uptrend. Next, Japan Stopics Index. Right on this day, in the live webinar, I mentioned that it was the time to buy topics or individual stocks in the Japanese market. Since then, price has gone up substantially, covering more than the risk distance. Much more than the risk distance, in fact. Today's traffic light candle color is green, shape is green. The weekly backdrop, color and shape, both are bullish. Topics is also in an uptrend. It is far above the upper boundary, overbought for many days. Therefore, we are not going to buy now. The buy time was right on this day when I mentioned about that in the live webinar. It's in an uptrend but overbought. Next, China's 300 CSI 300 index. It was moving sideways and that is continuing. The range is bound by trendline resistance and support. Today it displayed an indecision at the top at trendline resistance. So if anything, we may look for shorting opportunities if price can come down from here. CSI 300 itself may not have a short setup. However, using intraday fine-tune chart, you may look to short individual stocks. China market is continuing to move sideways. UK's FTSE index. That is also continuing to move sideways, bound by watermark resistance and support, and it also has multiple trendline support. The weekly is indecisive. For 2 weeks it is displaying doji candles. Weekly is range bound and daily is also range bound. same as we saw in the previous webinar. And lastly, India's Nifty 50 index, that was the strongest of the global markets and that is continuing. It's in a clear uptrend. Weekly backdrop color is bullish. Daily is also bullish, far above the upper boundary. It's overbought for many days, so we are not going to buy now. If we bought earlier, we may continue to hold the long position. That was a look at the global markets. The global markets are remaining exactly the same as we saw them in the previous webinar. That was the weekend webinar. That is Australia, Japan and India. These three markets are in an uptrend, and China and UK markets are moving sideways. For USA market, let's switch from Metastock to TradeStation. I'll use the market ETFs starting with S&P 500 ETF SPY. By the way, in this setup, you can see in the daily chart on the right, I am also using the expected move range, high, low, and the start of the week. This is the weekly expected move. If you wanted to use this indicator, Q expected move on Q Elite running on TradeStation, you may go to my Twitter page, twitter.com/Sagarnandi, and for now you may download it from the Dropbox link. It's available to all Q Elite users. Let's continue with the market ETFs. S&P 500 ETF SPY in an uptrend. This week's backdrop color and shape both are bearish. However, daily is still in an uptrend. There is no reversal short trade setup. Are we going to buy now? No, it is already close to the upper boundary. We are not going to buy, but it is in an uptrend. QQQ in an uptrend. The relative performance is showing it is outperforming the broad market. The daily chart is showing it is moving sideways for 4 days now at the upper boundary in an uptrend but extended. We are not going to buy now and there is no short trade setup. DIA, in the weekend webinar I showed that DIA and IWM were moving sideways. The backdrop color is continuing to be bearish. In the weekend webinar also it was bearish. The shape is also bearish in the weekly chart. Relative performance is showing it is severely underperforming the market. And in daily we see there is a breakdown below trendline support with a bearish flow. If we look at the momentum signals, we can see yesterday we had a bearish MOBO breakout from a squeeze with a kahuna. Yesterday's volume was above average volume. So DIA is continuing to show relative weakness, and in fact it gave a possible breakdown short setup yesterday. It also gave a go with flow short trade setup one reason you might not take it is because it has a trend line support nearby. If you were watching Dia using intraday fine-tune chart yesterday, then you might short it right at the point it was breaking below the trend line support. At the close of the day, you may be cautious, you may not want to short it. One reason is because there is a trend line support, and because it is a market ETF, and the other two market ETFs we saw, SPY and QQQ, they are remaining quite strong. It may not be the right time to short market ETFs. If any, you may, if at all you are looking to short, you may short not market ETFs but individual fundamentally weak stocks. Dia is continuing to be relatively weaker, but it is not bearish. It broke down below one trend line support, but there are several other trend line supports nearby. It will not be in a downtrend unless it can break down below all the trend line supports. That means it has to also break down below the weekly trend line support. Continuing to move range bound. And Russell 2000 ETF, it was and is remaining range bound in the weekly chart. In daily, it recovered nicely from the swing low. However, it stopped before hitting the upper edge of the sideways range. So the range bound condition is continuing. Yesterday's candle shape is bearish. In fact, it also has a reversal candle. Reversal candle at pendulum or price extreme high is always an extra sign to be cautious with long positions. So I will not certainly buy IWM now or small cap stocks. I will be cautious about small caps. IWM is the small cap ETF. There is no short setup using the weekly daily interval. You may look to short individual small cap stocks because it is range bound. It is at the upper side of the range, and it did display one indecision at the top signal 3 days ago and then bear release 2 days ago, and yesterday it had a bearish candle shape with bearish reversal. So enough signals to start to look for short trades in individual small cap stocks. Overall, we have to say IWM is also range bound. It's not in a downtrend. That was a look at the USA market ETFs, SPY, QQQ in very solid uptrend, Dia IWM continuing to be range bound. So we continue to see the divergence between different categories of stocks. That is the same conclusion that we reached at in the weekend webinar. Are the market internals different? Let's look at them using Q Global Market Breadth running on MetaStock. First, a look at the exchanges, broad exchanges, Nasdaq and NYSE. The yellow plot, percentage of stocks above 50 MA. For Nasdaq, it tried to go above the 50% level and dipped below that yesterday. It's currently at 45%. And for NYSE, it is currently at about 54%. So we continue to see that NYSE as a whole is relatively stronger than Nasdaq. There is no other signal worth noting right now on these charts. Let's look at the market breadth total view. This is the market breadth total view, including the calculations from 2 composites and 4 major indices. Again, you look at the yellow line, percentage of stocks above 50 MA. still in an uptrend with higher high, higher low. It dipped little bit yesterday, just above the 50% level. So about 50% of stocks overall in the USA market are above their 50-day MA. What category of stock is in favor? If we look at growth versus value, growth versus value line is uptrending, so growth is now outperforming. And small cap versus large cap, that is also uptrending. Therefore, small cap is now outperforming. This is a broad market view. Based on these two studies, we may favor growth stocks and small cap stocks. When the market is at an all-time high or near all-time high like now, at least for SPY QQQ, we are looking for possible signs of reversal. In this market breadth, they will come in terms of Hindenburg signal and also large distribution count, but they are not there. That is why I am continuing with the view that I am sharing in several webinars now, that I am not expecting the market to drop sharply and suddenly, because it has never happened before. In the past, market has never dropped sharply suddenly unless we first saw large distribution counts and Hindenburg signal. At least the large distribution count. That distribution count comes immediately. It's very simple calculation. And no drop has happened, sharp drop has happened without distribution count of 2 or more, at least 2 or more, and they are not there. So I'm not thinking market will drop sharply suddenly. That's why I am not looking for many short setups. However, yesterday that changed a little bit, and let's look at the reason from QH sector industry stock advanced decline breadth from 1 month to 1 day. 2-3 webinars before, the 1 day and 2 day periods breadth was very green, and I mentioned, because the flip-flop was going on for a long time between red and green colors, that I am expecting the 1 and 2 day periods to turn red, and that has happened now. Both 1 day and 2 day periods are red. All the pie charts are red by at least or about 80% or more for the most of the pie charts. So 1 day, 2 day periods are bearish. If we look at the longer term periods, 10 day and 1 month, okay, 10 day period is slightly more bullish than bearish. 1 month period, if we look at the stocks and industries, it is balanced sectors, little more bullish. 5 day period is also bearish. So longer term period is longer term period is more bullish, near term period is more bearish. That is one reason that you might look for bearish trades yesterday and also the day before yesterday. In any case, the 1 day and 2 day periods flip to red just as I expected and shared in the previous webinar. If we look at the bucket analysis, then we see it is balanced, almost at 50% level. 49% of stocks of S&P 1500 are above their mid Bollinger Band. So from bucket analysis perspective, the market is neutral. 1 day earlier, that percentage was 63. So from 63 percentage, it dropped to 49%. Not a very large drop, modest drop, but not a very large drop. The bucket histogram below that compares the distribution of stocks across 12 buckets, and the buckets are equidistant buckets of the Bollinger Bands. This distribution histogram is useful for extreme level alerts. The extreme level alerts come if the percentage of stocks in the uppermost bucket goes to 30 or 40%, or the lowermost bucket percentage goes to 30 or 40%. But currently the uppermost bucket is only at 2.4 percentage, lowermost bucket is at 7.2 percentage. So they are far from hitting the Now let's look at the technical breadth. Using Q Finder shows the balance between technical bullish signals and bearish signals. First we look at the weekly interval, that is clearly bearish now. All signals 86% bearish, strength 73% bearish, trend continuation 91%, reversal 90%. All the categories are now bearish. If we look at the number of bullish versus bearish signals, about 1:6 bullish versus bearish. So that is a very bearish picture. And we also have an alert from the number of weekly bearish headwinds. It is hitting more than 1%. Whenever the percentage of stocks showing weekly bearish headwind hits 1 to 2%, anywhere between 1 to 2% or more, that's a sign to be cautious that a reversal may be coming. So we have an alert from the bearish headwinds in the weekly interval as well. Weekly technical breadth is clearly bearish. Let's look at the daily technical breadth. That's yesterday's breadth. That's also bearish. For all the categories, all signals, strength signals, trend continuation, reversal signals, all the categories are bearish 80% or more. Weekly, daily, technical breadth, both are bearish. That is why you might start to look for shorting opportunities yesterday and also day before yesterday, combining the insight from technical breadth and also QH sector, industry, stock, advanced decline breadth. Now let's have a look at some of the stocks that I shared earlier. I had a bullish view on this stock, Gilead, GILD. I shared that view on this day when it came with a bullish flow. It was a go with flow long trade setup. At that time, the weekly was also bullish. However, after that, price could not go up. Yesterday, price tried to go down but closed with a bullish shape candle, long lower tail, and also displayed the indecision at the bottom. That is a somewhat bullish signal that comes at the bottom. However, if you used a GTC order with stop loss and the stop was using the Q protection signal, that would have been hit yesterday during the day, and you would exit with a small loss as planned in the swing trade. Let me show that exact stop level. If we took the long trade on this day using the bullish flow, then the stop would be just below the recent low. So you could put it using the protection signal at this level or at this level. If you use this higher level, then that was hit yesterday, assuming we had a GTC stop order. That is fine. We are expected to exit sometimes with stop. That's why we have a stop order, and that's why we have the Q protection signal to calculate the stop order. I had a long position in Gilead. I had a GTC order at the stop level indicated by the Q protection signal, and I exited the trade as planned with a small loss. Gilead is a biotech stock in healthcare sector. This I exited with a loss. And another stock I had a bullish view on, that was LMAT, LMAT, also a healthcare stock that had a bullish setup, again a growth flow setup on this day. That had hit the upper boundary yesterday, and in this case I had a GTC order to book profit at the initial profit target. So I exited this trade as planned with a profit at the upper boundary. Another stock that I shared earlier, UAA, a consumer discretionary stock, that was a bearish setup, and you can see I started sharing some bearish ideas and also taking some of them before the market turned bearish. I could do that because the industry of this stock was weak at that time. The fundamentals might not be weak. I don't remember. I may check. You may check. But Q guidelines allow me to short a stock where the industry is weak and technicals are weak, giving a proper short setup, even if fundamentals are strong, provided it is at a high price level, pendulum high, which was true in this case. So I suggested a bearish trade on this day. That was a growth flow short setup, and probably it was a breakdown short setup also. Since then, price could not go down. If you shorted the stock, you are still in the trade. Both the daily and weekly are continuing to look bearish. Relative performance is tilting down. So if you entered the trade, you may still be in the trade. Now, yesterday I shared another possible shorting idea. Not exactly, but at least a stock to be cautious of if you are holding the long position, and you could short it using intraday fine-tune chart. I shared it yesterday, 8 September, 12:35 a.m. So noon time, Eastern Standard Time. This stock broke below the weekly expected move in one day. Is that a trade signal or setup? And then I explained later that hitting the expected move in either direction is neither a bullish signal nor a bearish signal. You have to use a proper trading system to decide if you want to take a long trade or short trade. How is the expected move useful in that case? It is useful because if it is hitting the expected move in one day, then maybe it is a bit too late to short the stock. Doesn't mean you are going to buy it, and whether it is really too late to short the stock, that will also depend on your proper trading system analysis, but it still alerts you a bit that if the expected move has been covered already, especially on the first trading day of the week. In this case, that was Tuesday. Monday was a public holiday, trading holiday in the USA. If the expected move was covered in one day, you might be cautious, but still, again, you have to check the trading system charts to see if it was a bit too late. In any case, I shared my bearish view, at least not bullish view, on this stock FAST, that's using the 360 degrees analysis. FAST, the stocks industry, trading companies and distributors, that was one of the strongest and that weakened recently. The color codes show that, and it also showed deceleration. That was a reason to be cautious about long positions and look for shorts. And I looked at the Q scorecard for fundamentals. It was overvalued stock. Yesterday, 82% of peer stocks were down, and it was steadily coming down. Year over year, quarterly earnings growth sharply fell down. Year over year, quarterly revenue growth sharply fell down. Earnings is some distance away. So the fundamentals allowed us to short. And lastly, I looked at the technicals. This is a weekly chart of FAST, Fastenal. The company is Fastenal. Ticker symbol is FAST. It displayed a bear release signal yesterday, also shown here. So it was overbought and then the bears took control from bulls. The backdrop color turned bearish after a doji-like candle in past 1, 2, 3, 4. In fact, past 4 weeks had doji or doji-like candles, and then it broke down with a bearish backdrop color, also broke down below the trend line support. So the weekly was clearly bearish and it was showing the weakness at weekly pendulum high that was at a very high price level. And this is the chart with the expected move. It hit the lower expected move yesterday. That was the first trading day of the week. And if you looked at the other momentum signals, firstly here the candle color is bongo. Bongo turned red. It had the biggest down move in 3 months. When that comes in a stock at pendulum high, that is always a sign of caution. It is certainly not a sign of exertion on the downside. It may just be the beginning of a down move. When the biggest down move of 3 months come at pendulum high, as it was in this case. Not only there was a biggest down move of 3 months, we also had PSAR reversal, pocket pivot, bearish, Mobo breakout from a squeeze with Kahuna. A lot of bearish momentum signals, probably as many as you could get, plus it was very bearish in terms of hitting the expected move lower side in 1 day. It is the weekly expected move that was covered in 1 day. And if we look at the Q technical chart daily interval, relative performance showed it was out, sorry, it was down under it was underperforming the market, displayed a bearish pressure, came down with very high volume. The traffic color turned red, flow color turned magenta. I also showed that there were two trendline supports. One was broken, the other is still holding, and mentioned that because it closed just below the, just above the lower trendline support, that would be a reason not to try to short it at the close of the market yesterday. However, you could try to short it using intraday charts if you ran sonar on it during the day. So that analysis showed that at minimum you could be cautious if you are holding a long position. Using intraday charts you could short it also. Let's look at the intraday chart for Fastenal FAST. If we were watching in the morning session, we would use the 5-minute interval Q intraday precision or fine-tune chart. It created the early range high and early range low. Using the guideline, we could short it somewhere in this candle when it dropped below early range low. Initially, the stop would be just above early range high. In this case, we had previous day's close very close to early range high. So we might put stop just above previous day's close. The stop was never approached. Instead, price fell, and by the time price hit the pause line here, or the second pause line, by then certainly more than risk distance was covered and you could book partial profit in the trade, or you could continue to hold the stock as well. Another technique I sometimes use for stocks with liquid options is to close the stock position at the close of the day when I have covered more than the risk distance, and use part of the profit to buy options, either naked put options, which is rare for me. Instead, I could buy long put verticals or short call verticals, thereby making the trade guaranteed risk free by the close of the day. And why would I like to do that? I would like to do that because there was a trend line support just below previous day's close. This trend line supports hold very well, so there would not be reason to not make the trade risk free when we had the chance to do that. But we would like to continue to have a short position. Why? Because the weekly trend line support is broken and we have the biggest down move in 3 months. That may be the beginning of a down move. So instead of holding the short stock position, the appropriate strategy could be to book profit in the short stock position and probably buy short call vertical, thereby also putting time decay in our favor. So as you can see, I started taking some long trades and short trades. Some of the long trades like Jylid, LMAT I closed. Some of the short trades I am holding. FAST is actually one of them. Fastenal UAA is one of them. The market is still indecisive, so I'm not going to look for many trades today. If I see a good trading opportunity, I'll share it on the forum. Let me not take more time today. Thank you for attending. I look forward to seeing you in the next session, which will be during the weekend. Keep safe and trade profitably. Thank you.